Our focus recently might have been more on the World Cup, but the Iran crisis continues. Economic uncertainty remains. Oil prices are still high, and there is that prospect of high levels of inflation for consumers. In this background, grocery manufacturers are concerned about their volumes, about the threat again of private label, and in the retailing side of choice and particularly hard discounters. I'm Richard Herbert. I'm an independent consultant working with Europanel. In this series of short videos, I'm talking to some leading professors in the grocery field to gain their experience and knowledge of what happens at such times, and of course to offer their advice. Today I'm joined by Katrijn. Katrijn is a professor of marketing at Tilburg School of Economics and Management. Katrijn's focus is on retailing and on the relationships between manufacturers and retailers. And these are our topics today. So hi Katrijn, good to speak to you, good to see you again.
Hi Richard, so thank you for inviting me. I'd love to have this conversation with you.
Okay, let's move on to the topics for today. Firstly, with regard to private label growth. Obviously, private label growth, as we've seen, does grow at such times. Do you see this impacting the relationships which are often adversary between brand manufacturers and retailers? How do you see that area developing or working?
So obviously we all know that prices are going up, and typically that means that plays in favor of private labels, hard discounters, or any form of low cost option typically benefits. But what we very often do here is that we are mixing up our insights for, let's call these quote unquote regular recessions, and what we are witnessing now, inflation. What we do have to realize here is that inflation hits consumers, as we all know, but it also hits retailers and manufacturers alike, because it really is going to go down to the cost structure. And that is where all the notions about sheepflation come into play. Because what you typically have is that, yes, we all know that whatever we as consumers can spend on grocery, on other type of products can go down because of inflation, but it also gives a lot less wiggle room to retailers, because they play to the margin. They have really low margins, and to really sell something at a very strong cost point is actually hurting them, perhaps even more than traditional manufacturers, who have once again more wiggle room. They have other parts that they can play with, they have marketing budgets that they can play with, they can sort of look at logistics. When we look at hard discounters, when we look at private labels, all of this has already been stripped away. So the only thing that they can work with is the actual costs of the materials, etc. And when they go up, I mean, they can only do anything, probably the only thing to safeguard prices, or to safeguard their margins, I have to say, not their prices, is to increase their prices. And that is something that we've witnessed, is that when we look at the price evolution for private labels, also for certain hard discounters, they have gone up much more than what we've seen for regular conventional national brands. And of course that becomes problematic, because what is important when we look at the success of private labels, hard discounters, is more than just the price in absolute terms, is the price gap. And it's that what we see is narrowing. And if you just look at it, we actually even see that in certain cases, for instance, hard discounters are losing some share, even in hyperinflation type of settings, and that also private labels may not necessarily be the main benefactors of all the disruption that we are witnessing, and that is hitting the cost structure.
So consumers will start to notice that price gap does reduce, and that may in fact help brands and brand manufacturers in that way. Certainly, I agree with you. I've seen the prices going up more for private label, but you're still talking about a significant gap. And
Of course.
if prices and budgets are so important, then I guess it still leads to consumers making that choice to move to private label, assuming they're happy with that, and to discounters likewise.
Yes, of course. So there is still a price gap, obviously, but with it shrinking, the advantage becomes smaller, because what you also have to know is that, national brands and regular retailer formats, they also come with other benefits. They are more convenient, locations tend to be more convenient. They're easier to shop because they allow you for one-stop shopping. All that also comes into play, also especially when oil prices go up, and you may also want to think about how many trips you put in, and all these things start to factor in as well. So when you look at the overall gains that you may get, they may become less substantial than what it was before. And also when we think of the fact that most conventional retailers have invested in lower price point alternatives, you can also see that from a hard discounter perspective, they may be losing their edge. Again, when you look at countries like the Netherlands and Denmark, they lost share in the 21-23 period. And once again, why is that? Because on the one hand, price gaps were becoming smaller, but also all the other sort of advantages of a regular format became more salient. What we also see is that the way they were trying to sort of then gain back the share was by trying to become more of a, let's call this, conventional neighborhood store that really focuses also on other aspects like convenience, being nearby, sort of having to sort of put in less effort, perhaps less of a car trip, all these the different types of things that also come into play. So we do see that it is the balancing act has become a lot harder. It's no longer, let me put it like that, it's no longer like a straight given that they will gain, and that they will gain to the same extent as what we've witnessed during, let's call, as I call them, conventional recessions.
Yeah. I think that leads us on to our next topic, because of course, and that's hard discounters, and that there has been a lot of growth in store numbers in certain countries like UK, Italy, and so on. But do you think that will continue? Do you think that, and obviously the share has been tending to go with that, do you think that will continue, or is there going to be a sort of plateau effect that is not going to go beyond for that particular type of trade?
What we do see is that, well, it's a bit as what we've witnessed with private labels, right? There seems to be a ceiling. There seems to be a sort of percentage. Depends a bit on the market and the country that we're looking at. But for the longest time now, I think in most European countries, the share has been somewhat below, let's say, between 25 and 30%. Obviously, some markets like the UK are over-indexing. But again, it's not like they're growing infinitely. Again, I think that's the same with all the hard discount formats. They give a certain benefit and certain consumer advantages, but they don't offer you everything. And because of that, automatically consumers will keep on sort of dividing their wallet, the share of wallet between several, not just retailers, but several formats. And again, it's also something that we see when we just look at the evolutions that the Aldis and Lidls are going through. They do know that they have to become, let's call, I don't want to call it more like a conventional retailer, but they do also have to focus on store location, on store atmosphere, on being easy to shop, on making the life of consumers easy. Also, and that is not just a question of time savings, it can also, again, add up to real substantial cost savings. So I don't think that by and large, there will still be some growth margin, especially in certain countries. But when you look at the more mature markets, I don't think that they will keep on gaining the same extent of share that we've witnessed in past years.
Yeah, and I guess that you see that to an extent in Germany, where the phenomenon has been there for the longest. It's been much more stable with a little bit of growth relative to inflation and so on. But nevertheless, hard discounters remain and are a significant share of the business.
Absolutely.
So in that context and the uncertainty context, what sort of advice in relationships would you give to, and I think it does differ between large and small brands as well as to what that might be.
So again, what you have to focus on is the price gap. Don't be blinded too much by absolute prices. So when you see that, for instance, Aldi's and Lidl's or even conventional retailers are increasing the prices of the private labels, don't be tempted too much to increase your prices to the same extent, because reducing that price gap plays in your advantage. So cheap inflation to a certain extent is actually your friend from a brand point of view. So don't forget that. So, and I think that a lot of conventional manufacturers tend to sort of like seem relieved when they notice that prices are going up for private labels and hard discounters. But I would sort of like tell them to be cautious and sort of like try to maintain the price levels as well as you can. Of course, there will obviously be differences between the bigger brands who will be more capable, or they may find it easier to absorb the cost increases through other ways. For smaller brands, it will be harder. So that is a given. Again, what you have to sort of like think about is try to be creative, try to play with your portfolio, try to see how you can provide entry points that you can actually in these high inflation type of periods that you can promote. Try to think about being clever with package sizes, not in such a way that you're being accused of shrinkflation, but try to think how you can actually sort of play with your portfolio, with your SKUs, and what to prioritize. And I think that is going to be important. Again, bigger brands will have an easier time doing that. For smaller brands, I think that they may have to sort of think about how they can collaborate with retailers. For them, it may be a good perhaps point in time to even also sort of look at the Aldi's and Lidl's, who do have an interest in having more brands on the shelves, to see whether they can actually sort of collaborate in some way or form. Because obviously those smaller brands will be hit much harder if they actually do not cater to a particular niche. So,
Yeah, I think the smaller brands is interesting in relationship to something you were talking about a moment ago about discounters having to cater for more needs over time in order to continue growing, and maybe that's an area where smaller brands could benefit. Anyway, Katrijn, that's very useful, very interesting as always to speak to you. And I look forward to when we next meet, whenever that might be, in the UK or perhaps in Antwerp with you. Okay, thanks very much, and good to speak to you. Thank you.